Today, Representative Maxine Waters blocks a joint hearing on digital asset legislation, citing alleged corruption by the president over his crypto ties. Senate Democrats call for an urgent inquiry into a reported business deal involving crypto and the Trump family. And Jack Mallers explains his new company, 21, which would allow for a singular vehicle for Bitcoin exposure. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are mixed this morning. As of noon Eastern, Bitcoin inched higher by less than 1%, trading at $94,500. Ether fell 1.7%, and Solana's Sol token slid less than 0.5%. Okay, let's talk about the top stories. This morning, Representative Maxine Waters walked out of a hearing on digital asset legislation over concerns related to President Trump's crypto ventures. The top Democrat on the House Financial Services Committee blocked the session between that committee and the House Agriculture Committee from taking place, as joint hearings need the approval of every member. Before Waters left the room, she quickly explained why she objected.
I object to this joint hearing because of the corruption of the President of the United States and his ownership of crypto and his oversight of all the agencies. I object.
Now, instead of taking part in the joint hearing, Waters hosted a separate Democratic session addressing Trump's potential crypto conflicts of interest. Those include the president's meme coin and the Trump family crypto project World Liberty Financial, which recently announced the launch of its own stablecoin. Now, on the agenda of that meeting, to talk about the ranking member's discussion draft that would ban the president and members of Congress from owning crypto assets and firms. In a statement, White House Deputy Press Secretary Anna Kelly told us that, quote, President Trump is dedicated to making America the crypto capital of the world and revolutionizing our digital financial technology. His assets are in a trust managed by his children, and there are no conflicts of interest. Next, Senate Democrats are also raising the alarm on a reported business deal involving the Trump family. Now, in the latest letter sent to government agencies over President Trump's crypto ties, Senators Elizabeth Warren and Jeff Merkley called for an urgent inquiry into the reported deal involving UAE state-backed investment firm MGX, crypto exchange Binance, and the Trump family's crypto project World Liberty Financial. In the letter addressed to the Office of Government Ethics yesterday, the senators warned that the deal, if completed, would represent a staggering conflict of interest, lead to potential national security issues, and could violate federal bribery statutes. This is not the first letter sent to the Office of Government Ethics. At the end of last month, Senator Adam Schiff joined Warren in sending a letter to that office asking for an urgent inquiry after Trump's official meme coin surged on the heels of an announcement that top holders of the token were offered a dinner with the president. Responding to the latest letter, Kelly issued the same statement that she gave us for the prior letters from Democratic lawmakers. She maintained that there are no conflicts of interest, as President Trump's assets are in a trust managed by his children. Last, Israel-based trading platform eToro is aiming for a $4 billion valuation in its initial public offering. Yesterday, the company announced that it's seeking to raise up to $500 million from the IPO. That's through 10 million shares offered, each priced between $46 and $50. According to an SEC filing from yesterday, asset manager BlackRock also indicated interest in purchasing up to $100 million in additional shares from a separate batch offered to underwriters. The company reported its crypto revenue for 2024 at $12.1 billion, up from $3.4 billion in 2023. Back in September, the company agreed to pay $1.5 million to settle SEC charges related to its U.S. crypto offerings. As a result, eToro said that those offerings would now be limited to Bitcoin, Bitcoin Cash, and Ether. All right, for our main story, I spoke with Jack Mallers, who is now the CEO of 21. Late last month, the new entity entered a SPAC agreement with Cantor Equity Partners, an affiliate of Cantor Fitzgerald. Now, the goal of this new firm is to allow a singular vehicle for Bitcoin exposure. Mallers discusses this new company, which brings crypto and TradFi industry heavyweights together to launch a Bitcoin native firm. 21 Capital is launching as a Bitcoin native company aimed at maximizing Bitcoin ownership for investors. Why now, and what sparked the idea behind this new vehicle?
So to your point, 21, we want to bring a new type of company to the capital markets, one that's centered entirely around Bitcoin. The business is co-founded by Tether and myself. And so we've been in Bitcoin for over a decade. And I think what started as a lot of inspiration and really clever creative thinking by Michael Saylor and MicroStrategy turned into an opportunity for us, where we saw a market where there's increasing institutional demand, increasing capital markets appetite that we felt wasn't met in a way that we valued, which was a business that wasn't small cap, wasn't pivoting from an old operating company, wasn't rebranding. It was purpose built to be one of, if not the winner of this Bitcoin opportunity, founded by technologists that have built software in this space and successful businesses before. And what we really pride ourselves on is being, blue chip credibility with startup upside. We feel like we're big enough to win entering the market with billions of dollars of capital upon launch, but we're small enough to grow. And we're small enough to post Bitcoin denominated returns in what's becoming a really competitive capital markets appetite for Bitcoin exposure. So that's a lot of the founding of the business is we're not small, we're not pivoting, we're not rebranding. We're Bitcoiners that have built this very industry and are excited to bring what we believe is valuable to the capital markets.
And you're coming to market with over 42,000 Bitcoin. So what strategic conditions made this the right time to launch?
I think any time is the right time to be buying Bitcoin. I've believed that before I was the co-founder and CEO of this business, and I believe it afterwards. For us, the timing, again, was more just an opportunity. We believe that a lot of the folks that have taken upon MicroStrategy's strategy, they are smaller businesses. They may not suit the level of institutional demand that we've seen in our corners of Wall Street, in our corners of the capital markets. And then MicroStrategy is a very big business. They have a very big balance sheet already. Posting Bitcoin returns at that size and scale can be difficult. And we didn't see anyone in the market actually extending the ability of having this much Bitcoin on your balance sheet, having access to capital markets, and building technology beyond just owning the Bitcoin. We were hoping that some of these companies would build software, build products, build tools, find the high margin, high growth opportunities in this space and build on the utility aspect of Bitcoin. And nobody has taken on that responsibility, and we figured we would. So it was more just the appetite that we built for the opportunity and realizing, be the change you want to see in the world. We felt we were more than capable at bringing a blue chip, credible public equity to the market with the startup upside and the potential that we think the capital markets were demanding.
Can you talk more about why investors would look to something like 21 compared to, say, Bitcoin ETFs, which have garnered major adoption since their launch?
Yeah, so we're an operating business. That's the biggest difference. When you buy a share of 21, when you're an investor of 21, you're investing in an operating company, in a leadership team, and leadership like myself to go out and execute. So our KPI, our core KPI is Bitcoin per share. How much Bitcoin on our balance sheet representative of a fully diluted share? And our goal and our intent is, let's say in a hypothetical sense, our Bitcoin per share is 0.05 BTC. Mackenzie, we can actually grow that to 0.06 BTC, 0.07 BTC. And that's through launching products, launching partnerships, using the capital markets to accretively buy Bitcoin. And so when you invest in 21, it's a business, and our job is to grow your exposure to Bitcoin by being a shareholder. As an ETF, it's static exposure. If you buy 0.05 BTC worth of IBIT, you end with 0.05 BTC worth of IBIT. So the intent is to have your dollar go furthest in Bitcoin exposure by investing in an operating company that is capable of doing so.
You're now among the largest corporate Bitcoin holders. How do you plan to keep growing that stack? Do you have a strategy already in place for future acquisition?
Yeah, I mean, we're going to do a lot of what's already worked for other companies. There's some new strategies that we're really excited about. I think we're going to access capital markets and buy Bitcoin in an accretive way. And we also plan on building products and building Bitcoin native cash flow. That's the one that we haven't really seen any others do. If you look at our public filings and our business plan, we intend to build products and cash flow and high margin opportunities. And again, I mean, I'm the founder of Strike. Tether's the most profitable per employee business in the history of our species. We know how to build software, scale software, and create cash flow in this industry. And we were a little disappointed that that hadn't been a focus for a lot of these Bitcoin treasury companies. So we both are excited to use our initial capital base to accretively buy Bitcoin, but then also build on top of Bitcoin and extend the opportunity beyond just owning the asset on our treasury.
Now, you've introduced metrics like Bitcoin per share and Bitcoin return rate. Why do these matter for investors, and what are the biggest challenges to maintaining them?
Well, our big message to the market is judge us in Bitcoin terms. The high level thesis is that Bitcoin is going to continue to be the best performing asset in human history because it's the scarcest asset in human history. And in a world where there's more money printed, Bitcoin tends to be the best performing by a long mile. And so that's our long-term thesis. We actually don't get distracted by the short-term price action of Bitcoin. And so for our shareholders, and what we want the market to judge us on is, are we performant in Bitcoin terms? We don't like earnings per share. We think of that as an old legacy fiat metric. Bitcoin per share is, are we outperforming Bitcoin? Are we accretive in Bitcoin? Are we giving our shareholders more Bitcoin, more access to Bitcoin? And the Bitcoin return rate, BRR, so funny play on money printer, go BRR, but it actually shows how fast we're able to grow in Bitcoin terms. So when the capital markets look out and say, how can I participate in this Bitcoin story? What operating company is giving me the best performance in Bitcoin terms? We want to be competitive there. And that's where we want to be judged. Because ultimately, if this continues to be the best performing thing anyone can own, and we're the most performant at giving you exposure to that, we think both ourselves and our shareholders are going to be really happy.
After taking on the CEO role at 21, you made it clear that you were not leaving Strike. Why take on both, and how do the leadership roles differ?
Yeah, you know what's funny is why take on both? Why not? I don't know who in humanity created the rule that you can't run two companies, but I can, and I am. And I mean, for me, it's really, my life has been spent pushing Bitcoin forward, trying to be helpful in Bitcoin's story, because I think Bitcoin can change the world in what I believe is the right direction. And that's been my life purpose. So it was a pretty obvious endeavor for me to be candid. I actually, I've called up Jack Dorsey as a friend of mine, and he's run two companies before. Many other people have done this before. So I feel confident, and so far so good. The difference between the businesses, I mean, Strike is a Bitcoin financial services firm. So we just launched Strike Lending. We have a brokerage business, a wallet business, a custody business. We operate in over 100 markets, and we're making Bitcoin more useful through financial services to our customers around the world. 21 is trying to be the best capital markets vehicle for the capital markets to participate in this Bitcoin story, and be the most accretive in Bitcoin terms for investors to get access to Bitcoin and have a dollar go further in a vehicle like 21 than an ETF like IBIT. They're two entirely different businesses targeted to two entirely different investors and customer bases, with one shared overlap mission, that Bitcoin can change the world. And it's the biggest technology opportunity. I mean, this technology is going after $400 to $500 trillion worth of global wealth. And so it could use all the businesses and all the firepower to get humanity to that point.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.